Hello everyone, this is Mubashir. Welcome to another video of daily market analysis. In this video, I will reveal my technical analysis to help you make informed trading decisions. Join me as we navigate the current market conditions. The week so far has been highly volatile, especially since Tuesday. As you can see here, a huge green candle, huge red candle, followed by this lower wick. Then again on Wednesday, we had this huge crash with open high, huge crash. And today it did the opposite. We had an open, almost flat open somewhere around here. We came till the lows and had immediate rejection. And since then, we have been trending slowly higher. In between, there is a spike trending sideways around here. Then again another spike. Then it took some pause at this resistance zone. A spike up, then a rejection, and retested it for resistance. Came back to accumulate some support, and after accepting some support, it has shown some strength continuing higher. So as I mentioned in my morning video, this week we had an open high since Monday. Monday was an open high. It had a slow trend down day. Tuesday was volatile sideways, and on Monday we had a view of bullish. But after it broke this support level and entered this region, we changed our view to volatile sideways, and that's how this day had behaved. And on Wednesday's market report, I had mentioned that the range is between 470 and 170. That's where the market was likely to be. But once this level broke, 124, it became bearish. So after this level touched over here, we could have planned bearish trades, and that's exactly what I did. I changed my sideways bias to bearish bias and took bearish trades, and I carried them with stop loss for today's expiry. So here we could have initiated the bearish trades. It came here, resisted, it continued to break down. So this was a very huge move, and today we had a huge recovery as well. So for considering just yesterday's candle from high to low around here, so we have recovered around 50 to 61 percentage. In between it is currently. So reversals, complete reversals are generally considered after it crosses the 61.8 percentage retracement, which is also this resistance zone. You can see here this was a support here. It bounced from this support. You can check how it behaved in this zone before. Resistance, resistance. It accumulated, then resistance, retested resistance. After the breakout, it tried support, support, again support, and finally a breakdown. So now, after the breakdown, this region should ideally act as a resistance. But if it can hold and go above this entire resistance zone, then we will change our view to bullish. But till then, as I mentioned, from Monday we have selling. We had selling on Wednesday as well. So this week has been showing our bearish bias, and anyone who sold call options above 250, even though there was a the trend was completely against, due to the decay, you could have managed the positions with stop loss. Yes, even if you would have entered here yesterday, and in this spike, even though the market went above your level, because of TK you would not have been in a bad position. You would still be in good profits when market reached higher than your entry area. So that is due to the time decay. From here to here, there would be time decay, which would help. So if you choose your strike appropriately, you could have stayed with the position and made profits today. And staying with the direction of the trend. Another is from here, from the Monday high to low. This is the zone now. This 0.5 to 0.68 is perfectly encapsulating our resistance zone. So this makes it even more clear that above this zone is where we can change our view to bullish. This is based on our structure. This is just based on market structure. So that is how I use Fibonacci to see change in trend direction, where the trend is likely to be. Currently, we can see it's a down move. This pullback is not sufficient to change our view to bullish as of yet, but above 22,300 is where we can keep a bullish stance. Till then, this can very well happen. Let's see. Yeah. Till then, it can be a pullback followed by a continuation lower. We had one low here, second low here, third low here. So this can be a good breakdown level as well. So until we get a confirmation of an up move, we have to keep our view as bearish. So what is likely? This is what I meant by maintaining levels to trade according to our levels and change our view accordingly, because the market won't stay in one place. It moves, and according to the direction of the trend, we have to change our view and change our trades accordingly. So above 22,300, the market is likely to be bullish. Now let's see about bearish. We are in a bearish you know territory currently, but where are the supports? We had after this huge region. Let's see. Let's check back. Since 15 January, we had this consolidation followed by a huge crash after the HDFC Bank results. And after the retest over here, we had a huge spike in and huge rejection. Again a rejection. Second, this was the first rejection. Second, third rejection. Then afterwards, it accumulated here, tried to break out. This was a good breakout. However, one retest, second retest, here the trend line broke and we had a fall. But after the Nvidia result, we had a spike up. We had one test, two tests. Again, we had a trend line here. Trend line broke. We went below, and we had the GDP results on 1st March. And since then, we had a huge up move. We went into new all-time high territory. So whenever the market had come below this region, we had a V-shaped recovery. This was once, this was twice, but these were due to news factors. Nvidia result and GDP were factors. Over here, on the other hand, there is no news. The reason for this pullback is not very clear. It could be a dead cat bounce currently, even though we have the market breadth is showing that 81% of stocks participated in this pullback. So there is renewed hope that the market can go higher. But as I had mentioned, keep this level in mind. From this high to low, 22 9 22 to 90, and this is my resistance zone, 22 to 97. So above 22,300 is where it is likely to be, bullish. Till then, we can keep our bearish trades with stop loss around here, and we can add bullish trades once it's above this level. And see, 22,000 is also a big round number. So one time, two time, three times. This is a triple bottom. This is a good support currently. Now let's look for the bullish direction. Bearish direction, we know that once it reaches, let's see, even for this move, what would be an unhealthy pullback is below 22,000. So 22,020. If it reaches around 22,000 tomorrow, it would be an unhealthy pullback. It can lead to a further crash. So this is a level to watch on the downside, 22,000. If it touches 22,000 also, it would be bad for the bullish direction. So if we want to trade in the bearish direction, I mentioned that stop loss is should be here. And as for the bullish direction, stop loss is 22.20. So keeping these stop losses in mind, we can plan our trades. And for example, intraday, there was no reason to plan any uh, short trade. There was no close below our resistance zone. See, once the market enters our zone, we have a rejection. We can take our trade. We can take our long trade here, keeping our stop loss here. So here also we could have taken a long trade after the close of this. So that's how we can take, either we can take on the breakouts or we can take on the retest. That's the only two ways we can take trades on support and resistance. I think I'm making this video way too long. Let's see what else we have. Yes, one more thing I wanted to say is this structure, this pattern can likely unfold. For this, we had a almost 50% retracement. So we can see currently it is for this down move, we have a 41% retracement. So it can go up. It can go up and recover this entire move. And once it comes into this, even though this is a resistance zone where we had one support and a double top here, once it breaks out here, it's near the all-time high. In all-time high, I usually don't consider as a resistance zone. I always consider that as a breakout area. So planning bearish trades over here, we should be very careful. We should look for rejections, and it's not advisable to plan bearish trades over there because all-time high is usually broken out higher. Let's see. One more is from yesterday's high, from Wednesday high, this structure. And this low, as I mentioned, it can go till here. It will be fine even if Friday we break lower, as long as we don't break this level 22,000. If we don't reach 22,000 level tomorrow, this structure, these two structures which I mentioned, can likely unfold, and a break above this level can indicate a breakout for targets up to 22,400 or higher. Actually, it can even move higher. So bullish direction, bearish direction, both are obviously possible currently, but stop losses, current view, current bias as per the structure is still bearish. For bearish trades, stop loss would be around 22,300, and for bullish trades, stop loss would be around 22,000. Keeping these levels in mind, please plan your trades accordingly and trade responsibly.